Hi, it's Adam Hewis, and I'm coming to you from the digital studios of Market Club, and we're looking at a very popular market. A market's got a lot of press, and that is the gold. This is a spot gold chart, and it's a daily chart, and we're using classic bar charts, open high-low bar charts. So the point I want to bring to you today in terms of this market is this. If you look at the highs we saw right here, and you look at the high we had right here, the difference between these two highs is approximately 23 days. Now we're doing calendar days, so we're counting weekends as well. So if you look from this high to this next high, which is right here, it's 24 days. So the action that we're seeing today is probably going to be a little bit more defensive. We're not negative on gold. Please don't misunderstand our statements here. We think we're going to see some sort of a pullback, potentially. And you're going to be looking at these time periods here, very similar time periods, somewhere in the future. But for the moment, I think gold has probably momentarily topped out, and we're going to see a liquidation. And if we take our Fibonacci tool, which we'll do right now, we'll see how far we think this market could come back. So let me just take everything off the screen, go to our Fibonacci tool. I'm going to scope this in a little further as well so you get a better idea. So there we go. I'm going to go from the top, today's action, and pull that down to the lows that we saw in late October. And we'll just pull it out here too so you get a better idea where those prices are. Okay, so we're looking potentially at this market of coming back to the 1,085, possibly even the 1,074, and lo and behold, the 1,063. I believe we're going to see some liquidation in this market. I think a lot of people probably got into the market late, and those markets tend to shake people out, and then they continue going higher. The other indicator is our Williams %R indicator. We've talked about this in our other videos. It's beginning to roll over. These are not basically major indicators saying that the trend is over. It's not. The market has a lot of energy underneath it. But certainly this level right here would be an area to have any stops in this market, in my opinion, at least if you're a short-term trader. If you're a long-term trader, stay and make it pay. That's one of the hardest things to do in trading, is to stick with a position when a market is making a correction. But in this case, I think it's the right way to look at this market. So again, we look as though we've made a 23 or 24-day high. We're turning back down. Our trade triangles will actually give a signal should we go under this low, and I'll give you the exact price on that. And the low there we're looking at is 1,096.70. It is 1,096.70. If the market goes below this level, our short-term daily trade triangle will actually go negative, meaning be out of the market and looking for a place to get back in. Hey, this is Adam Hewis, and it's a short video on gold. I wanted to share this with you. We're doing this during the middle of the day, trading day. How we close is going to be anyone's business, but for the moment, I think this is going to be an important element for this market to overcome sometime in the future. Thanks for stopping by. Every success in the market.